Something's going wrong. Someone's on the phone. 3 o'clock in the morning. And talking about. Man, y'all don't know nothing about that song. Anyway, welcome to Breaking Bread Presents Fibonacci Retracements. In this video, I'm going to go over the basics of using the Fib retracement tool and how you can use it for day trades and swings. Quick disclaimer before we begin, this video is for training purposes only. I am not a financial advisor. I'm just sharing with you the tools that I use when day and swing trading. So assume all risk when entering trades. Fibonacci retracement. I always love to start off with a quote. You can't cheat the grind. It knows how much you've invested. It won't give you nothing you haven't worked for. So if you don't know by now, then you will soon know that trading is a skill that requires work. You only get better by getting your reps up. The more work you put in, the more confident you will become in yourself, and the better your results will be. You got to put in the work. All right, so what I'm going to talk about in this video, I'm going to talk about the Fibonacci tools. I'm going to talk about the levels, how to draw them, what is an invalid drawing, examples, and then I'm going to take you to the charts. So let's start off. What is Fibonacci? Fibonacci is a trending tool that we use to plot levels using percentages which are based upon the mathematical relationship within the Fibonacci sequence. These levels are used as support and resistance levels to identify potential reversals to continue back in this original trend. So we know that price is going to do one of three things. Price is going to go up, down, and consolidate. But we also know that price has memory and that it follows the same patterns and trends within the market. We use these fib levels to anticipate possible reversal zones. So what are these fib levels? When using the fib retracement tool, the basic fib levels that you should be most concerned about, 38.2, 61.8, and the 78.6. These are just the basic levels that you should be concerned about and you should have on your chart. You don't want to have all those. You should at least have the 61.8%. Now I know you're thinking, but what about the 50% level? The 50% level is not in the Fib mathematical sequence, but we use it because price tends to retrace back to that level also. So that's your 38.2, your 50%, 61.8, and your 78.6. These are the levels that price loves to retrace back to before continuing back in this original direction. Also, you want to make sure that you can find an indicator or you can mark it yourself, and I'll show you how to do it, of the 50% of the previous year, previous quarter, previous month, previous week, and previous day, because price will retrace back to those levels also before rejecting and heading back in this original trend. So you want to have that on your charts. Also, there are a lot of levels within the Fib sequence, the mathematical sequence, but we're just going to focus on those levels that I spoke about because price tends to be attracted to those levels the most. So Mo, what does that mean? I'll show you. So here you have two images. Here is a clear downtrend. So what does it mean when price gets back to the 50% level? That means that this is 50% of this downtrend here that we measured. What does it mean when price gets back to the 61.8? That means based off this downtrend movement that we measured, because I have my anchor placed here at that high and this low. So measuring this downtrend, 61.8% of this level, of this move. That's what that means. Same thing, opposite direction. It gets to the 50% level on this pullback. That means that is 50% of this measured uptrend that I have here. It gets back to the 61.8. That means that is 61.8% of this move that I have measured here. Right? That's all that means. All right, so what's the level fill? This is when price retraces back to one of the previously stated fib levels and price touches that line of that level. So when price gets back to this 23.6, touches it, that is a level fill. It gets to this 50%, it touches it, that is a level fill. That's all that means. All right, so how to connect them. Now, this is probably the most important part if you do this wrong, then that setup you think you're seeing, you're possibly not seeing that. So you want to make sure you're connecting this correctly. You connect this wrong, price is probably telling you a story it's not trying to tell you. So you want to make sure you're connecting this correctly. All right, so to measure an uptrend, you're going to connect from the swing low to the swing high. Now you want to make sure your lows and high are so clearly the lows and highs. Also be mindful that you're doing this from wick to wick, not body to body, not body to wick. You're doing this from wick to wick. So in this example here, we have a clear uptrend. So I'm going to connect from the low of this candle, the clear low. So the lowest low before this move started going up to the highest high before this pullback began. So the bottom of this wick on this candle to the top of this wick on this candle. And we're watching what price does to the right. All right, so it has to be a clear low and a clear high. Not consolidation, none of this sideways movement like this. No, you want a clear low, clear high, and we're watching what price is doing to the right. Now this happens on any time frame. Doesn't matter the time frame, you're connecting the same uptrend FIBS measurement on any time frame. You're connecting it the same exact way. So swing low, swing high. Downtrend is the reverse. You're going to go from the high to the low. Make sure it's clearly a high and it's clearly a low. So you're going to connect from the highest high before the move started going down to the lowest low before the pullback began. So swing high, that's the top of this wick. Swing low to the bottom of this wick. So you're going to place an anchor at the top, connect it to the bottom, and watch what price does to the right. All right, so valid, invalid trend. A trend is said to be valid if price fills a level and continues back into its original trend. This is called trend continuation. It is said to be invalid if price breaks through your golden zone fibs and continues in the direction continuing past the first anchor that you placed, and that's considered a true reversal. Now let's look at an example of a valid trend. So in this image, you see a clear downtrend. So here we have a clear downtrend. And we're going to go from the highest high to the lowest low. Now, I know you'd probably be like, well, Mo, why you didn't connect it to this candle here? I would have had this not happen yet. But since this candle came in and took out the low of this candle, creating a new low, then this is how we're connected it. So it's going to be from this high to the lowest low before the pullback began. So this high to this low, you're watching what price does. It pulls back to the 23.6 level. It fills that. It starts to head back down, creating a newer low because it took out this low. Now we created a newer low and we're heading back down. So this trend is said to be valid. We're still validly in a downtrend, right? Came out, created a new low. Now we're headed back down. So this trend is said to be valid. An invalid trend would look something like this. Here we had a clear downtrend. So that'd be from the high to the lowest low, wick to wick. And we're watching what price does to the right. It's breaking through our levels. It's filling all of our levels. It begins to pull back. It bounces off our 38.2 and starts heading back up. Now, once price breaks above our first anchor that we have connected, depending on which way you're connecting the trend, which way you're measuring the trend, but once it created a new high based off of this high, this trend is now considered invalid. We are no longer in a downtrend. We are now in an uptrend. This is a true reversal. So now, once price starts to pull back, we're going to connect from this low to possibly this high, and we're going to see what price does to the right. But this original downtrend is now invalid. We are now in an uptrend. So is the fib tool all I need? No, not at all. I do not recommend just using the fib retracement tool alone. You want to use levels in combination with whatever strategy you use to find your level. So with me, I trade using a strat. So I would like to see any of my fib levels line up with an actionable signal and Broadening formation on my chart. So if the 50% lines up with my Broadening formation, that's a high area of confluence that I want to keep an eye on to possibly find entry to take this play back into its original direction. Now, if you don't trade using a strat, I don't know why you don't. But if you don't, that's fine. If you want to use VWAP, you want to make sure your VWAP lines up with your fib levels. If you use EMAs, same thing. Support and resistance, supply and demand, whatever you use to read price action. That's what you want to use. That's what you want to see lined up with your fib levels. If you see it lined up, that is a high probability setup for a reversal back into the original trend. It doesn't matter what you use to trade with. Just find those levels that line up together and watch if price reacts to those levels. You see the price starts to react to those levels, meaning pulling back. That's a high area of confluence, and you want to keep your eye on that setup for a possible entry. So what time frames? Time frames depends on what you're trying to do. Are you swinging, day trading, or even scalping? Fibs can be used across all time frames, but they are considered to have a high probability setup when based off the higher time frame. So what does that mean? So for an example, a 38.2 retracement pullback on the week chart is a stronger level than it would be on a 3-minute chart. There's a lower probability for price to respect that level on a 3-minute chart versus the week chart. So I would say if you're looking to day trade, then I would do from the day down to the 30-minute for your fib placements. If you are looking for a long position, then I would do from the day chart up. So do I enter when price fills a key fib level? Again, no. This is how traders get stuck in place. You want to wait until you have confirmation that it is only a retracement and not a true reversal. So when price approaches a level and you see price reacting to a fib level in combination with whatever tool you use with your strategy, again, to read price action, supply, demand, support and resistance, broadening formations, VWAP, whatever you use within your strategy, and then whatever time frame you trade on, you want to wait, see price starts to pull back in the area of confluence, price starts to pull back, and you want to see what that next candle does that opens up, and then you execute that play if it starts heading back in your direction. So you see in this image, I have a clear uptrend. So uptrend, we go from the lowest low to the highest high. This looks like an hour time frame. And as you can see here, I'm taking a low from a previous day, right? You don't have to just stick to just the next day or 2 days ago. Like, really think outside the box when connecting these fibs. But anyway, so low is low, high is high. We're watching what price does to the right. Price is pulling back. It gets to our 50% level. It begins to pull back. It's giving this a long wick. It's bouncing off this level. This is what we want to see. So it starts to pull away from the 50% level. Next candle opens up. It breaks down past the 50% level and begins to pull back. And it starts to head back up. Buyers started buying it up. Turning this downtrend candle into an uptrend candle. And this red dotted line here is my support and resistance. Is an example of support and resistance. So you have your support and resistance line. You have your 50% level. You have price pulling back from both. So this is a high area of confluence. And once price starts pulling back based off your strategy, how do you get into this play? And if you look at the story that price is telling you, when the market opened up on this day, it pulled off from this area. So it already told you it didn't want to go that lower. All it did was come back to the same area it was already at and pull back again. It came back to the same area, pull back, already in. Please be mindful that price is going to push back past a level to scare you out of the play or to hit your stop loss and just head back in this original direction. So don't let this strong push down, because it did it here, scare you out of your play. Like, it has to close below the level for me to be concerned. And it never did that. It created this long wicks and it started to pull away. So based off your strategy, how would you get it to display? All right, so another example. Here we have a clear uptrend. Low is low, high is high. And this is from the previous day also. It still respected these same fib levels, right? So price started to pull back. Purple line is my broadening formation. It got to my 78.6 level and started to pull back. It bounced off my broadening formation, bounced off to 78.6 and started to pull away. All right, so once it started to pull it away from the level, you want to keep an eye on that play. Next candle opens up, it's definitely pulling away from that level. So based off my strategy, how would I get into this play? Also be mindful, the deeper the retracement, the stronger the move back in this original direction. Meaning, if you see price retrace back to the 38.2 versus seeing price retrace back to the 61.8, since it's a deeper pullback at that 61.8 level, it's a high probability that it'll be a stronger move back into the original direction. So another example, here we have an uptrend. So low is low, high is high, price begins to pull back. Purple line is my broadening formation. Touch my broadening formation once, touch my broadening formation twice, touch my broadening formation a third time. So it's clearly telling me, looking at the story that price is telling me, it may not want to go any lower. Price got to this candle, got to my 61.8, it pushed down and pushed all the way back up. Buyers started buying it up, turns this downtrend candle into an uptrend candle. So based off my strategy, how would I get into this play? If this was your VWAP line and price is bouncing off of that, how would you get into this play? And like I said, the deeper the pullback, the stronger the move. So this is what you want to see. You want to see price retrace back to that golden zone area. You can find a rejection off that golden zone area. Please execute and take that play. Please do. I look at it as price putting fuel in the tank for it to head back in its original direction. So if price, let's say price puts 38.2% fuel in this tank versus 61.8% of fuel in this tank. Price tends to go further on that 61.8 take of fuel versus that 38.2. So you can find a deep pullback like that and price rejecting like it is here. Execute, right? Got a high area confluence, that 61.8. Take that play all day, every day. All right, you want to be mindful of a full plan before you get into the play. You should know your entry, your exit. If price pulls back and it's confirmed that it's just a retracement, what am I going to do at that level? If I'm already in the play, am I adding contracts? Which contracts am I going to add if I do add contracts? If it gets back and closes below the 38.2, am I exiting? Like, you should have all that in play before you get into your play. So for me, if I am in this play already, I have a clear uptrend. I see price gets to the 78.6, it's pulling back. That next candle opens up, it's pulling back even more based off my strategy. I'm going to add contracts once I have it confirmed that this is just a retracement back into the original direction. So I'm going to add cons when it's confirmed for me if I'm already in this play. If I'm already in this uptrend play, price is still respecting my fibs from the previous day. So it's not going to scare me out of this play because I start to see price pull back. All right. But once I have it confirmed that price is pulling back, I'm going to add cons. All right. So let's say I'm in this play and price pulls back to the 38.2. So based off my strategy, if price closes below this 38.2, I'm exiting. I'm not giving back all my money. But these are all things that you should have in place before you even get into this play. If price closed below the 38.2, I'm exiting. If price is closing below the 50%, I'm an exit. Like, you should have that in place before you even get into the play. If it's confirmed that it's a pullback, I'm gonna add cons. What are you gonna do? You don't have to do anything. Just let it ride out. But you should have that in place before you get into the play. All right. So let's take it to the charts and let's see these fibs and how to connect them. All right, so I am a Thinkorswim person, but I know most people use TradingView, so I'm gonna show it on both. All right, so here you have SO on the week on TradingView. So to find the fib retracement, you're gonna go over here to the left. You're gonna click on this arrow, fib retracement. You're gonna connect, let's say we wanna do this downtrend. So we're gonna connect from this high to this low. Now to go to the settings, you can either click settings here on this gear, just click that, or you can double click it and it'll pull up the settings. So here, you want to make sure you have those levels on that we talked about, and you see all these other Fibonacci levels that's in here, but these are the basic ones that you should have. And then you want to also make sure you have extended lines on to the right connected, because if you don't, this is what it looks like, and it's not a clear story. You want as clear as possible, and you want to make sure you have that check. Down here at the bottom, that's how you change the background, the levels, font size, all that greatness. But this is what you need at minimum. This is what you need on TradingView. All right, so again, downtrend. We're going to connect from the high to the low. How do we know if it's a good connection? Because price is reacting to our levels. So that's accurate connection for me when I see price is reacting to this level. This is a week chart. So when the next week opens up, I want to see what price is doing, because currently it's rejecting at 38.2 since I see it's pulling away. So I want to see if we're going to head back down, or do we keep making a deeper retracement, or maybe possible a true reversal. Who knows? But that's what you want to see since it's the week chart. Now you may be looking at that and be like, okay, Mo, then why you didn't connect it from this one? You can. Again, you want to go with the one that's telling you a story of price reacting to your fib levels. So if I connected from this high to this low, price already broke through this 38.2, it's reacting to something. So that's telling me this is probably not the most accurate connection, so don't use that one. So I would not use this connection. What if you're like, okay, Mo, well, what about this high? You can definitely connect it to that high also. High, low. Price is respecting that 50% level. So since price is respecting the level, that is a good connection for me. So again, I need to wait until the next week candle opens up and see what we're doing, because currently right now we are respecting this 50% level. Do we break through, go to that 61.8 level, or do we start to retrace back down to the 38.2 and down further back into the original trend? We don't know. We got to wait until the week candle opens up, but that's what you're looking for. So you want to make sure price is respecting or getting a reaction from your fib level. If price is not reacting to your fib levels, then find another connection. Simple. All right, so that's TradingView. Let's take it to Thinkorswim. Thinkorswim. Where we at? All right, here we go. What is this? This is Microsoft. All right, let's see what we look like. All right, so this is Microsoft. Take it to the week real quick. I want to show you guys the 50% areas that I talked about. All right, so like I said, you want to make sure you have the 50% of the previous quarter, month, week, year. I don't know where my date is. It should be on here. I don't see it. Oh, there we go. And the day. So quarter, the day, the month, the week, and the years down here at the bottom, right? You want to make sure you have at least those on your charts because price will retrace to those levels and then bounce off of it and head back down. So if price is above the week 50%, the previous week 50%, and the previous day, that's more leaning towards calls. If it's below it, that's leaning more towards puts. But you want to see what price does in between those levels. Because if you look here, price is currently above the previous month 50%. So it's looking like it's just retracing back to that quarter. Once it gets to that quarter, if it breaks through, then it breaks through. If it don't, you might catch a rejection counter like it did here and head back down. So that's what you do with these 50% levels. So to find the Fib tool on here, you can do one of two things. You can go here at the bottom where the cursor is, you click that, click this Fib retracement percent thing here, click that, it'll pop up, or you can just go on the chart, you can right click, hit the percent tool here under add drawings, and you're gonna connect from that high to that low. That high to that low, how do we know it's accurate? Because we're getting a reaction to our Fib level. So this is a good connection, right? So currently price ejected off of 38.2 and it looks like it's heading back up. So at least it's 50% and we'll see what price does there. But that's how you do it. Then this is the week time frame. Let's go down to the 15-minute time frame. Maybe the 30. It's a 15%, 15-minute. I'll probably play on the 15-minute. All right, so 15-minute chart. Downtrend. We're gonna go from the high to the low. Well, Mo, what about this low? You can go to that low. But since this low took out this low, we're gonna connect it from this high to this low. Looks accurate because price is respecting or getting a reaction at these Fib levels. So let's say you're in this play already. You took this for puts. Price is coming down. It retraced to the 23.7, the 23.6 level, came back down, went back up to the 38.2 level and headed back down. Now for me, this is how a day trade turns into a swing because nothing is saying get out of this play. It's staying below, for me, it's staying below the 50% of this trend. So I'm going to ride this into the next day. Now, once I've seen price do this 38.2 level and give me this type of reaction, it makes this strong move back down to the bottom. Here's where I would add contracts if I am already in this play. So that's what I said about having a full plan. My entry, my exit, what am I going to do if it pulls back? If it closes above a Fib level, are we exiting? You want to know all that. Have that all in place before you get into the play. So for me, if I'm already in this play, price never gets back to this 50% level. It never closes above the 38.2 level, which for me is my exit. If price closes above the 38.2 level, I'm out of there, but you can do what you feel. If you want it to close above the 50%, go for it. 61.8, go for it. Just make sure you have that full plan in place before you get into this play. Be mindful when you're in these plays, price is going to make a jerk reaction to scare you out of the play or to hit your stop loss. So be mindful of that. It's going to break through a level and then start to pull back. And you'll be like, oh, dang, I shouldn't have got out of that play. Yeah, they're trying to scare you out of your play. Don't let them do that. It has to close, not break through. It has to close. So be mindful of that. All right. All right, so none of this matters. None of this matters. None of what we went over already matters if your mindset is not right. I would not be doing you any justice if I just teach you what I just taught you and think that's it. Like, nah. Mindset is 90% and technical analysis is only 10%. In my eyes, 90% is the most important part of trading. If that is off, then you might as well not trade. None of that other stuff even matters. The technical analysis is the most easiest part when trading, right? You want to make sure you are disciplined and your mind is right. That is the most important part. You want to be okay with things that you can control and things that are out of your control. What are some things that's out of your control? These are things within trading you have no control over. So that's the news, the volatility, unexpected news, which way the market trends is out of your control. Unexpected life events like this war that's going on. You control none of that. And you have to be okay with the market doing what the market does, because you have no control of this. You can be in a play, and I've definitely been in plays to where it's going in my favor and news drop and it's going the opposite direction. I have to be okay with that's the risk when trading in the market, that those type of things that those are type of things that can happen. And you have to be okay in your mind with those things happening. If that happens, shake it off, move it to the next play. Don't take that energy into your next play. All right, so be okay with things that you cannot control. These are all things that are out of your control. But what you can control is your analysis, your entries, your exits, your timing, your position size, the risk management, how much we lose. My saying is, we marry the green, divorce the red. I'm not going to lose that much. In our mindset, we have to be okay with knowing that the market is going to do what the market is want to do. All you can do is create a plan, stick to it, and hopefully you are on the right side of what the market is trying to do. Stick to your plan. If the market does opposite of what you think, then exit your plan, shake that play off, and look for the next high probability setup. There's always another play out there. Don't shut down. Don't let that get into your head. If it doesn't work out, cool. We're going to move to the next one and we're going to kill that play. So don't take your negativity into the next play because you took a loss on one play, right? We do red plays, but no red days. So clear mind equals clear trades. Clear mind, clear trades. All right, some quick tips before we end. It is important where you connect your highs and lows off the fibs. If you don't do this correctly, that can throw off your whole plan. So like I said, when you connect it and you see prices not respecting any of your fib levels, then find another connection. Also, you want to at least have that golden zone on your chart, the 50%, 61.8 levels on your chart. Those are key levels. Now, all those levels we talked about, price is attracted to them. But if you don't want to have them on there, it's too much noise on your chart, then at least have that golden zone on there, 50% at 61.8. Also, if the original trend is going to continue, then you will see retracement occur at one of those previously stated levels. So like I said, price retraces back to that 38.2, at 50%, at 61.8, 78.6, and even that shallow pullback at 23.6. You will see price get a reaction there. If you see price react there, you can look for entry there, or that could tell you to just stay in your play. So trust what price is telling you. And like I said earlier, you want to mark your 50% levels on the previous year, previous quarter, previous month, previous week, previous day. You want to know the overall trend before taking a play. You want to go with the flow, not against it. So if the overall trend is a downtrend, don't play an uptrend. If the overall trend is an uptrend, don't play a downtrend. You can, but we look for high probability setups. So we want to catch that retracement back into the original direction of the overall trend. And I told you guys, have a full plan in place before taking a play. That's entry, exits. What am I going to do if it's a pullback? Am I adding contracts? If it closes above or below this level, depending on what you're playing, which way you're playing, or am I exiting? Remember, it has to close above or below the area for me to exit. But what level is that when you're trading? For me, it's the 38.2. It has to close, not push and pull back. It has to close. So be mindful of that. Remember, there is no guarantee that price will produce a reversal. However, the fib retracement levels can provide anticipated or potential levels to where you can decide to take a trade from or not. So remember, You want to see the area of a high confluence. So you want your fibs to line up with whatever tools that you use to read price action, right? Like I said, I'm the Strat, so I want broadening formations to line up with my fib levels. So that's what you want to do also. And the most important thing, your mindset is everything. Mindset is everything. Accept what you can't control and accept what you can control. This is the most important part. None of this above stuff matters if that mind is not on set. All right, so there's so many ways that you can use fibs to become a high profit, consistent trader. You can use fib for day trading, swing trading, scalping. For entries and exits, it's up to you to decide as a trader what you want to use them for. But make sure you're thinking outside this basic box that I've drawn for you guys. Think outside the box. Play with the fibs. Go back test it. Go connect it. Go see what levels that price, other levels that price likes, and execute. I will be making more videos in the future on other different ways that I use the fibs, but this is just the basic ways. And like I always say, it's either going to work or it's going to work. That is the only option. So keep your head down, keep putting in the work, keep getting your reps up, and I promise this will work out for you. If you have any questions, feel free to drop it in the question section below, or you can DM me. I'm here for us all to win. If we would just keep going and don't stop. Till next time, thank you for breaking bread with me. Have a blessed one.